You know when I'm ready.
All right, we're going to record right now.
This is Market Week Live, February 28th, 2025. Information and support for traders and investors. I'm so excited to be here. I'm here with our amazing team, and we're going to show you some great stuff here moving forward. In this show, we'll bring you an express round, a Q&A, where you get to fire questions at us. That's for level 1 to 4 members who are here in the room, and you can add your questions right now to the Q&A. The floor is yours. You can ask about our services, trade planning, chart analysis, trading issues, anything that may be coming up for you that you need help with. Well, we'll be glad to do our best to answer that. Matt's going to bring you a quick review of our services, looking specifically at our level 2 special. This is 3 months not occurring. You'll see the amazing depth of what we offer and this absolute bargain that you're going to get right now with a ton of information. And then I'm going to bring you my stock market analysis. We'll look at correlations also to the SMH. That's pretty key to the analysis. We'll be looking, of course, at some of the evidence, probabilistic projections in time and price. Say that 3 times. And see our advanced indicators and applications at work. We're going to do a little mini stock sectors also. And this is really an important one because we talked about the potential of a rotation coming for the market. Well, here is your rotation, but it's not good for U.S. stocks. And I'll show you that. I think this is really a neat one to look at. If you are brand new, get acquainted, go to the top of our website, go to the free stuff and click SIR Lite. You can get our S&P analysis every day for free. And no, we take off Saturday and Sunday, sorry. YouTube, subscribe to this channel, click that notification bell, and do like this video. Give it a thumbs up. On X, follow me at askSlim, and any questions you might have, write to Matt at askSlim.com. This says all the legal stuff that you need to know. It just says, of course, that anything that we bring you is entertainment and educational purposes only. You should always check with your financial professional and absolutely follow your own trading plan. Get our legal at askSlim.com. You'd have issues with the membership or website issues, you can write to team at askSlim.com. And again, anything that you need to know on our education analysis, first time specials, or upgrades, you can write to Matt at askSlim.com. Our host today, sadly, Katie could not be with us today. So you have myself. I'm Slim. Everybody calls me Slim because my badge on the CBOE when I first started on the first day was SLM, Stephen L. Miller. So I made my first trade and somebody said Slim. Stuck with me. Now my wife calls me Slim, my kids call me Slim, my grandkids call me Papa Slim, and so that really stuck with me all that time. We have Matt that's been in this business for 2 decades, and the same thing for Arvi. We are all experts in cycle analysis, and we hope you learn from us. And Katie is our really great expert in options, and I hope you've been taking advantage of the stuff that she shares with you. Go to askSlim.com, about askSlim, meet the team, and watch the little videos in there that give you some idea about who we are and our history. You'll enjoy those. All right, we're going to take your questions right now. We've been inviting people to look at put things up on our Q&A. You can ask us right now for things. We're going to be looking at the things that you share. I have requests right now for gold, Bitcoin, and natural gas. Which I will be looking at, and see there's a couple there for RV also to look at. So you have about 5 or 6 minutes that you could add questions on there, and then we'll move to the next section. So we're going to take your Q&A questions right now. I'll start with looking at gold and Bitcoin and natural gas, and then I'll turn that over to RV unless another futures questions comes up. So let's switch over, and I have Bitcoin up here first. So why don't we start with Bitcoin? This is our view that I really want to show you as I'm looking at our market condition monitor, which is on the left of your screen. And then we have 3 different charts on the right of your screen. This one here being the weekly chart that we're looking at there. This one here being a daily chart. Let me just get the pointers up here. and this one being a 2-hour chart, which I will often refer to. So let's start out on the weekly, and here we're looking at Bitcoin on the weekly chart. So I have intermediate Bitcoin. Now I'm using BITO because that's our reference to the futures on here. And you can see in the intermediate look at that it is bearish. And this is a look at a algorithm in here that is built on multiple time frames and weighted the way we want it to be weighted with our proprietary indicators, and that throws off a condition. Now you can see in here that on February 21st, that was a week ago, we went from slightly bearish to bearish on the intermediate term right there. If I go to the short term right over here, it's very bearish. And you can see that turned very bearish also a week ago. So this gave an amazing heads up on the way that Bitcoin was changing. Now let's just look at this weekly analysis here. And what this says is that the cycle pattern that you see here on the bottom. Now, this is a drawing tool. This just gives us a guide of the repeating rhythms here when we look at that. So let me just blow it out a little bit more, and you'll see how these repeating rhythms have been beautifully consistent in here. Once you broke out of this downside channel right there, you could see it exploded to the upside. Now let's get this closer look. What happened here? So it was just a couple of weeks ago, and I've had people on social media, of course, saying that Slim, you said it was going to go to 117 or 126,000. I did, because that was the highest probability until we had the breakdown. Now you could see in here the momentum has been negative on the intermediate chart. And once you had the rally here or here, we can't quite tell which of these was the significant trough. But once we had that, we made that trough in there, it rallied, and this is a very extremely negative condition where it either rallies 2 weeks or 1 week there, not exactly sure. And then it comes down and breaks these lows. This one is actually right here. And when it did that, it told us that this cycle was turning down already. So we have negative momentum here. And now if I switch over to the daily, you're going to see the same thing happened. It tried to rally in here. And you could see there are 3 minor cycles within the harmonic family that you have right over here. Yes, it's harmonics. It's just like music. And then when you rallied here and failed and got under those levels, it tells us that it's in very, very bad shape. Now, you got down over here to around 78.5, which was just under that first support level and bounced up. So that sets up this sell zone right in here. If it gets up here, let's say into 87,000 to 89.7, I think that's a screaming short, because the odds are it will be moving down again. So you see, we got our slim ribbon actually turned negative right over here. And look at the slim ribbon PO right over here, screaming at you, saying momentum is turning down. It's down. It's down. It's telling you there is something bad happening. And that's on these days right over here. And then, of course, it accelerated to the downside as it broke those supports. So this was fantastic information, both from the market condition monitor, which told us from the breakdowns in the cycle patterns, and this is projecting out to a longer period of time where it would decline. Now, let's just take a look at the monthly chart. The reason I'm looking at the monthly chart is because I had a request to look also at the longer term. And you can see in here that these are beautiful cycles also. Note that this was down 70%, 39%, 78%, 31% in each of those declining phases on the monthly. However, if the monthly declining phase has begun, and you look at the momentum here, it's still pointing upwards. The intermediate, as you look over here, is telling me it's negative. So I'm concerned that this is a major top now in Bitcoin, and this is the first support was right around where we got to about 79,000, and the next one over here is at around 72.5. So I'm going to be conservative and say let's use the 72.5 target. But this right over here, the ideal low is out in November. So you can imagine the kind of damage that could happen in here. So this market is going to have to improve itself very significantly to avoid much lower prices. See this peak right over here is at around 74.3. Coming across that might be support, might just be support for a while. And then this cycle low support is way down here under 50,000. So, but there are supports in the middle here, which I don't have. But right now, this is not looking good at all. And there is certainly a good reason to consider that this could be a major top when you look at this. Let's just look at the 2 hour really quickly, because this gives you an idea of how our information is so valuable. You can see in here where the slim ribbon PO turned red and the slim ribbon turned red. That was warning short-term traders that are using this for directional purposes, for even intraday traders, that this was in trouble. The slim ribbon negative in here, the reversal scout negative, and the slim ribbon PO screaming at you right in here that these were downside resumptions. And look at the market condition indicator down over here. It's at minus 100. I mean, it doesn't go lower than minus 100. And once it crossed over here, this blue line right there, it turned bearish. And it's been very bearish ever since. So I've taken a long time in here to give you just Bitcoin, but this is such incredibly valuable information, and it really screams at the importance of using our applications to really get a very good handle, along with the momentum conditions, along with the cycle configurations and support resistance and how they act around that. All of that is the sum of the evidence and why Bitcoin gave very negative signals before it actually turned down really significantly. So we'll say that was some great analysis. Let's look at gold. I'm going to put GLD up here. You can see in here, looking at the intermediate, let me just switch this to /GC, and you can see how this all works together so incredibly well. You can see here that the intermediate term is still bullish. And that went from very bullish, see this down arrow, to bullish 2 days ago. So the intermediate term is still bullish. When you look at the cycle configurations in here, it says, yes, there's a few weeks that it could still come down, and the daily chart synchronizes with the weekly chart sometime in late March. So there's about 4 weeks we could still be in a corrective period on here. But this low over here, making this cycle, making just another much, much higher low in here, says that once this is all over with, then you can look for, and you can see these up arrows pointing here. The reason it's gray, it points down because we're in the final phase over here into this corrective period. So it's not red because we just want to show that there's a declining period in here, but it's not serious. When I switch over to the daily chart right over here, this is a lot more serious. You see, we have a breakdown of this cycle low that points to the declines right over here. So this support here is 2807. This support here is 2756. This is where those cycles come down right over here into late March. So that's how there's a synchronicity between the cycle over here that bottoms on the weekly in late March and this one on the daily. So this says in this yellow zone right over there, and you could see the value of those corrective phases, those yellow zones. Those are periods of risk. And since we broke that support, we are in a period of risk now. Again, we're pointing down to just around 2,800, just around 2,750 as the potential. But because the longer term patterns look so good, so let's look at the short term here. So the short term went from neutral to slightly bearish just 1 day ago. I'm assuming this is going to go from slightly bearish to bearish pretty quickly. And you can see that. How did the 2-hour information help you? Well, you can see in here, where did the 2-hour information turn negative? Right here, both the slim ribbon and the reversal scout giving you that information. Here's your resumptions of momentum on the downside. The market condition indicator staying on the positive side right over here at 29. This is the swing zone between 25 and minus 25. And when it crosses it and goes through that minus 25, it's a negative signal. This one is still showing you there's support coming from the longer term time frames. So corrective period here, and then likely moving up. Let's take a look at natural gas. So that would be UNG on our system here. And you could see short term is neutral, intermediate term is still bullish. So that means we're probably in some kind of a correction here. /NG is the natural gas futures that we'll look at in here. And let me just get the daily up there. And you can see in here, as I bring up the weekly chart, this is super, super powerful. Take a look at those cycle rhythms. They are exquisite when you look at that. Please do go to our top of our front page, go to workshops, go to where it says cycle analysis workshop, watch the free video. You're going to learn so much about cycle analysis just for free when you look at that. So here we're in this rising phase. Look what happened when all of these corrective periods were aligning. That's the synchronicity right there. And then it moves up. Now, it looks different on the daily chart because natural gas has a severe contango where there's a big differential or spread between the near in and the further out. So the daily chart does not really look proper when you look at that. In fact, that needs some updating there. But you can see in here, once it made the troughs in this area, it began to move up. So we'll look for continued upside move, but a corrective period over here where it could pull down and then give you another resumption to the upside. Upside targets here, about 475 and 520 in there. So we're expecting maybe a little pullback and a continued upside move in natural gas. Let's see, I did that. Let's see if I have any more futures in here. That does. Let's see. Nope, that's it. That's everything I have. Somebody requested SMH. I'm going to look at SMH a little bit later in the show. DJV asked me about the overlapping cycles in SPX, and I'll be looking at that also when we get a little bit later. So I did all the features I'm going to do, and now I'm going to turn this over to RV.
All right, Slim, thank you so much. Great job as always. Let's go ahead and pop over to a few of these symbols that were asked. First one we're going to look at is BHP. So I'll go ahead and share my screen. Give it a second or so to load. Okay, so you should be seeing our screen here for BHP with the weekly on the left and perfect, and the daily on the right. So let's pop over to the weekly chart. So on the weekly chart, this low here looked a little bit early. So it was possible that it was going to form a low, but you can see what is now happening. We are getting a now look back at that low into when that trough was actually due, 127 to right around 47. So the highest odds right now is that we would be actually seeing a low form shortly and then see this curl its way back to the upside. If we hop over to the shorter time frames, you can see follow the translation. This is really super important. We rallied here for that cycle, right? And this was looking then like it was going to form a higher low base. But then as soon as we turned red, right there on that RS on the daily, look at this selling that has since happened here, which has now looked back at the low. So what this is saying is we would be actually looking for a low to form shortly here, a trough that's due over the next few weeks or so. And we have a zone from 47 quarter to right around 46. We'll be watching for that to form its trough and then for it to turn up to the upside. But as of right now, the overall bias is still for lower in the short term. If we hop over now to Rio, same exact thing. This one had a low here that was trying to form early and is now turning down. So I'll be watching for one more move on the downside to look back towards this low and then for this to turn back up as what we have been looking for. If we hop over to the short term, same exact picture. We have seen a high now form after earnings. We have curled down. There's a 78.6 at around 59 quarter or so, and there is a key cycle low at 57.85 with a trough that's also due over the next, let's just say 2 to 3 weeks time or so here in Rio Tinto. So same exact picture. Overall bias in the short term has now shifted firmly to the downside. Hop over to Lilly. Lilly, very bullish pattern off of that trough. There was a low that was due here. Then it did end up forming a higher low, curling its way back to the upside. We have a 78.6 on the intermediate term at around 916.70. This old high is at 972.5, a trough that is due 3.3 to right around 428. We are, as you're seeing here, what is the overall, the overall shape of the move that we are looking for. We are looking for a rally, I would just say smaller pullback as the highest odds, and then a move back to likely all-time highs is coming in Lilly as we look out further here. Hop over to the short term. Very bullish action here. A low that is due shortly. We are just basically looking for a small dip down, likely into this zone here, somewhere around the 888 to 864-ish area, and then for this to turn its way right back to the upside and make higher highs. So very strong action in LLY. Hop over to the XHB. And what we're seeing here is that there's a trough that is due 120. It's right on 414. If we pull up what's going on here on the weekly time frame, it is a bearish overall setup, and we are seeing that here as well. We are looking for a move down, possibly towards that. Uh, uh, oh, Slim, hold on. Can you go ahead and grab this from here, sir?
Hold on one second.
Sorry about that. Got my kid all of a sudden coming in here, so just got to give me 1 second.
All right, I should be back here. All right, so we're going to, Ari got a bit disturbed there. So we're going to end this section right here and begin to move forward. And once,
Slim,
yeah,
I am back. This is just how it is, guys. This is like, real life. So not a whole lot you can do when your 3.5-year-old runs in here and says that they have to go to the bathroom. So let me just I
four and a
can
half. When they're 4.5 years old, they're going to say, "Daddy, can I show the charts?"
That's life. What can I tell you? All
All
right, sorry
right, so
about
you're
that.
back. You got more to do here?
I'm back. I have a couple more.
Okay.
I apologize.
Okay. All right.
So where we are here, again, we have a low here at right around 97.40, looking for a look at that level, right? And then you can see a super clear left shoulder, head, and then watch for a right shoulder to form. But I'm going to be looking for a rally off of this trough. If we hop over to the short term, a low that is due 227 to right around 313. We have a zone here from right around 98.40 to 97.5. We'll be looking for a sell-off into that mode. Hop over to the short term. The overall bias is bearish, as you're seeing there. That is all lining up for still lower, likely, in the short term. You can see our zone here, as I said, right around, let's just say, 98.40-ish to 97.30, looking for a move down into that zone, and then for it to form its low and watching for a curl back to the upside off of that. So that is certainly on the on my overall list to watch for a move to the upside off of that trough. So certainly quite interested in the XHB actually to the long side shortly. Finally, we will look at BLK on the intermediate term. There is a trough here that is due 12.9 to right around 3.3. 918 to right around 880 is when that low is due. This is clearly still in a sell off with a low that is due shortly. So keep this one on the radar as well. Back to the long side, still very bullish. You can see we have a move up, a sell off. Highest odds are we would be looking back towards these old highs, towards that area there in that next rising phase. So very bullish longer term setup here in BLK. On the short term, we are selling off, seeing a series of lower highs, lower lows. We are looking for a move down into 930s, right around 917-ish, trough that is due shortly. So, this is also one that we would be watching for it to turn back up to the upside here off of this low. And that is what I have here, Slim, in these names.
Okay, I'm going to grab it back from you now.
All right, cool.
All right, I'm back. That was our Q&A. I hope you found that very interesting. Remember, if you become a level 1 to 4 member, you can then participate in the Q&A, ask the questions, and we will be glad to have you. That'll be great. All right, so let's take a look now at what Matt has to bring us, because this is the opportunity for you to actually become a member at an amazing special. Matt, take it.
All right. Thanks, guys. Great analysis. We will be launching askSlim reality TV soon, so we'll keep you posted on that. All right. So I'll share my screen here. Okay, you should see the homepage of askSlim. So for those of you that don't know about askSlim, we are a technical analysis services company, and we provide premium membership options for multiple levels. I'll take you over to our membership services area. At askSlim, you can become a member at 4 different levels for our core services, and then we also do offer a service for day traders. What happens as you go higher in the membership level, so as you go from level 1 to 2 to 3 to 4, the more extensive you will receive in terms of coverage. So we'll expand the number of markets that we cover, the number of stocks that we cover. And then as you get into the levels 3 and 4, that's when you get the comprehensive access to our trade planning tools. And then also in level 4, you get access to our charts directly, and then our MCM Pro notification application that we also have. So there are 4 levels, premium membership levels to askSlim, and then we have our day trader service. And as Slim mentioned, today we are launching a special offer for level 2. Level 2 offer is for 35% off, and you will get 3 months. It's essentially a 3-month trial. It is non-recurring. With that, you are going to receive, if you see here, just a huge assortment of technical analysis services, as well as content and trade planning tools. And I'm going to show you a few of those right now. I'll be doing a live presentation webinar review of the level 2 services on Tuesday. So there'll be more information going out on Monday. If you are a free member, or really any level member at askSlim, you will get that information. As Slim mentioned, you can also sign up for our Snapshot Lite, which is free access to the S&P 500 technical insights that we share. I'll look to go live on YouTube as well. So for those of you that want a deeper review of what is available in level 2, I will be sharing that. But essentially at level 2, you are going to get directly connected to our professional technical analysis. And what's most important is the comprehensive coverage you're going to receive on the major markets. So in terms of the S&P 500, the NASDAQ, the Russell 2000, you're going to get information on those markets on a daily basis. And that includes intraday information. That's going to include short-term information. It's going to include intermediate timeframe information. That's technical reports. That's going to be live streams. So there's just a huge assortment of information that is covered on the indexes on a daily basis. I'm just going to pull up a couple of those examples right now. So this is also what we call our chart stream. So this example here is of the SPX, which does come with the level 2 membership. And I just pressed the play button on that, and you can see it's running live now. So this is that multiple time frame grid that we use. This is proprietary to askSlim. And we have our weekly, our daily, our 2-hour, and our 15-minute information on here. So this is excellent for that short-term trader who is trying to keep in touch with what's happening with the major markets, in particular here, the SPX. On it, we have our reversal scout. This is the 2-hour that I'm looking at here, and you have the 2-hour reversal scout, the 2-hour slim ribbon. And again, this is happening in real time. So we have a direct stream to the S&P 500 and the analysis that we do on that, and that runs throughout the market session. Also, there is an opportunity to view the intraday information. So this little grid here on the 15-minute, we have for the SPX, the NDX, and the Russell 2000, and that's running live also. So again, you're going to have comprehensive coverage on the major markets. If you have an interest in the stock market, the U.S. stock market indexes, I would say that askSlim is going to provide the most comprehensive coverage out there. You're going to get that daily information. We also have a video analysis that we put together. That's a collaborative effort between Slim and Arvi. Slim puts the charts together, and then Arvi will go through all the analysis typically on Wednesdays. That comes out. And what you see here is we have energy futures, currency futures, precious metals, crypto, treasuries, stock indexes, grains and softs. And this is the Future Speak minutes report. So there's a video that it comes out with the coverage on these major markets. And then what you can do is come to the minutes report, and you can click on the links, and you can be taken directly to the specific analysis that was completed on that market. So if we wanted to look at light sweet crude, just click here. It would take you directly to that spot in the analysis or of the video where Arvi prepared that analysis. So that's multiple time frame analysis that is done there. That's going to be the weekly and daily chart, and you're going to be able to see the cycle analysis, the momentum analysis, those projections, key levels. So very important detail that we share. Again, you have direct access to a professional technical analysis firm, essentially at your disposal on a regular basis. For those of you that are interested in the technical analysis, specifically our charts, we have 84 symbols that we cover basically on a daily basis. They are being reviewed. All the major stock companies that you would have an interest in. So you can see all the way as I run down here, Apple, AMAT, AMD, Amgen, Amazon. So if I click on Amazon, for example, it will pull up the weekly and the daily chart. You have that dual perspective. Down below here, you can see the cycle low timing dates as we talk about those periods of risk on the weekly chart, and also on the daily chart. If you click on a specific symbol, that's going to pull up that chart, and you can see the information. This is Amazon weekly. Amazon is in a cycle low timing window. You can see how well this information helps to provide a framework for your trade planning process, as you have the cycle timing brackets on here, giving a sense of that timing. And then we alert you to when those key risk periods are, where you have high volatility, where you go from a declining and then a bottoming phase, and the expectation of that new rising phase that starts. And you can see here in Amazon that we are now in that period of risk, and we're getting that pullback that this timing frame called for. All right, I'm going to jump back over here. So again, this is the charts hub. This is the level 2 dashboard. I'm going to click on that charts hub again. Going to take a second here just to pull up all the symbols. All right, so it's very, very, very simple, very easy to get this information. I'm just going to click on CAT again as an example. You can see the dual chart perspective. Again, you have that cycle timing information in terms of the cycle low dates that you can pull up on every single symbol to see when those key periods of risks are. And I'm just going to scroll down so you can see all the different symbols that we cover in our focus list. And we have the futures markets, gold, silver, copper, platinum. Then we have our energies, oil, and we just keep going, natural gas, the dollar. So Forex, currencies, grains and softs. I mean, really, you have a complete universe of symbols here to be able to follow. There's always something going on in terms of opportunities, and we are covering these on an ongoing basis. All right, a couple more I'm just going to pull up. I'm going to show Arvi's office hours. So as I said before, that you really have a direct connection to a professional technical analysis firm. And what this is, we call it office hours with RV on a weekly basis. RV takes requests from our members, and then he puts together a video analysis review of each one of those symbols. So there's a maximum of 15 symbols, but just about everybody over the course of a month has an opportunity to share something. It's most likely that you might have a symbol that someone else is also interested in. So the videos run anywhere from about 30 minutes to an hour long, where RV takes the opportunity to go through all of these symbols in terms of a weekly and daily perspective, our multiple time frame analysis, talking through the conditions, the timing, cycle behavior expectations, what's happening with momentum, what's happening with the price patterns, what the expectation is based on the sum of the evidence for the key levels. So again, it's very, very comprehensive, professional, technical analysis. You're really not going to find this level of analysis and then engagement with the actual technical analysis team out there. So this is an opportunity for our community of members to engage with a professional technical analyst, ask questions, and see those symbols covered by our analyst team, and specifically here, RV. So you can go on our Discord. So we have a Discord for the community of askSlim, our premium members, and you can request your symbols there. So it's a great opportunity to not only learn, but to see how we apply this information for trade planning purposes, which really is the key point. All right, that was really what I want to cover in this snapshot around the level 2 opportunity that we have here with our special going on. I'm going to go back here and show that once again. It is a special offer. We're saving 35% on level 2, and it is $114.75, and it is a non-recurring opportunity. All right, back to you, Slim.
Okay, I will take it back. All right, great job. You know, that is an incredible amount of content that people can get for that a little small amount of money. But I think what's key is that, you know, a lot of people get a little concerned about, okay, I'm going to subscribe to this, and then they're going to auto renew me again, and then this is what we want to do is give you a real opportunity to experience what we do, and then we're not going to renew it. So the fact that it's non-renewing is just very important here. You can get a great sense for who we are, and then we're going to send you a special again afterwards so that you can come on the regular membership, and you'll have a better sense for what would really fit for you. So really, this is a great opportunity to take advantage of really learning from this exceptional team. So thanks for doing a great job on that, Matt.
You're welcome.
All right, we're going to get to the stock market analysis and projections. First, this important information. Always take the time to read this slide because this is so important. It tells about our approach to looking at the markets and the type of analysis we do, and about your using the information that we provide, or really anybody provides to you, and the important aspect of trade ownership. You must own your own trade. Without that, you will not be managing your risk properly. All right, let's talk about what happened today and in the stock market this week. Well, we all know the indexes fell sharply, and that was after short-term momentum turned negative. We saw that happening, and then the breakdown of supports, and then the selling really came in. The Russell, S&P 500, both down about nearly 2.5%. The NASDAQ down almost 5%, and this was at about 12:30 Eastern time that I got these numbers, and this is on, well, you could call it tariff fears. I mean, the reason why the markets really started to accelerate to the downside is President Trump says that the 25% tariffs are coming on Canada and Mexico. They've had their 30 days, and supposedly there's still all kinds of drugs coming into this country, which is what the president says is his reason for these tariffs. You might argue that he just wants to try to get some money in the country, and an additional 10% on China, the same thing. And China's rhetoric says they're really going to fight back on this. So we have this little Cold War that is beginning, or starting up again. And to add to that, NVIDIA earnings, they were good. but not good enough. A little bit of a miss on what they expect for future margins. It's a big excuse. That's it, just that the stock was just priced for perfection. And it would have taken a massive amount of good news to get NVIDIA moving to the upside. That huge drop really broke the bull's spirit, is what we've seen here in the markets. And you can see that as they are dumping the risky assets. The riskiest one, of course, crypto, which I showed earlier in the show, with Bitcoin down about 13% on the week. It's down at worst level about 25 or 26% from its peak. And if you did not watch my analysis on that earlier in the show, you can go back there into the full show if you're watching a clip right now and see the analysis that we brought on Bitcoin, gold, natural gas, and a bunch of stocks. So that's in the full show. The intermediate sum of the evidence now is showing high risk. And for those of you that are members and you saw my year-end show, which was put out 2 months ago, I had talked about the probability that the stock market would peak somewhere around 6175 on the S&P 500. Well, it got up to about 6150. This is a potential for a top for the stock market for 2025. I say potential because we don't really have the longer term breakdowns yet. The intermediate term is just turning down, but I still have to speak to that because there is that possibility, and we're in a significant period of risk right now. I'm going to show you those charts now as we move forward. So we're going to look at the S&P 500, the NASDAQ, the Russell multiple time frame analysis and projections, and I think there's more trouble ahead, and I'll show you that. We're going to look at the correlation to the SMH for trading timing and for some possible opportunities for trades, both on the short side and on the long side. So you're going to see that. And then I'm going to show you a little mini stock sectors where I think the actual rotation in equities is happening, but it's happening out of U.S. stocks and into European equities and actually China also. And we see that as tons of weakness comes into the U.S. market and a lot of strength in the European equity market. So I want to show that to you because I believe there's still upside opportunity in Europe. And the fact that the dollar is weakening and the fact that their currencies are strengthening is another positive for the European market. So we're going to take a look at that also. So now let's switch over and look at the charts. Of course, we're going to look at the S&P 500. So let's look at the SPY here. And actually, let's just have all of the indexes up right over there. This is the intermediate indexes that we're looking at right here. Of course, this is the market condition monitor. And let's just open this up all the way. And this is showing us the intermediate conditions looking at the market condition monitor. Level 3 and level 4 get this, and you can also put on our alerts. We have a special application for you to get alerted when these things change. And you can see that here on the intermediate patterns. These are now neutral, but once this week closes, I think that based on what I'm seeing, these are going to all go to slightly negative, slightly bearish. The IWM could go to bearish. So the same thing for the diamonds. There is a breakdown going on in here, and that will, I think, show up as these being bearish starting on this weekend when this updates for the intermediate. The daily, of course, updates daily, and you could see what's going on here, and that is the IWM is very bearish, and the other ones are bearish. And they went from slightly bearish to bearish 2 days ago on the 26th. So they had turned to giving us warnings earlier than that as the market began to turn down. So let's start out by looking at the daily chart on the S&P 500. Now, what's very important in here is that you have a momentum downturn right over here, and you have this significant downside break, of course, going on in the S&P 500. This is a key level. That's the 78.6%. You could see that on that yen panic that they had over here, it got here and tickled it and then turned right back up. And that made this minor cycle bottom right in there. And then you got the rally. And the rally, based on this being a positive configuration and momentum turning up, as you see right here, it should have taken out this high, and it did. But then it began to get up here into this resistance area. That number right there is that 6175-ish number that I talked about as the potential peak for the year. Now we had other upside extensions in here, but with the daily chart turning negative, that took those out of there. So now we are right now, you'll notice these are gray downside arrows. They're gray because the intermediate here is still neutral, but those are going to turn red, I believe, the beginning of next week. So this is a negative shape, and you can see right in here that this, if we're right and we have the downturn coming, that brings you down into May, June. Now, I talked earlier in the year about the potential severe risk coming out into the summertime, into the midpoint of the year, and that being the potential lows for the year coming in that time frame. And you could see this is the ideal downside bottoming timing that you have right in here between April and June. And these are pointing to the very center right over here. So this is a period that's of risk right over here. We'll put one of these yellow things in there as soon as this turns negative. And then that tells you, look out. Now, when I look at the daily chart, this is very important. The daily chart has this breakdown. So in other words, this cycle right over here made its low right there, and then it rallied, made a higher high, and broke that low. It even got down and broke that low right over there, which was that intermediate low. So it is clearly has downside momentum going on in here. You can see that as this right over here. This is the option bias study, which was positive all the way to this period right over here. It said keep your positions positive. This now turned yellow, which is neutral right there, which says neutralize your positions essentially. And when that turns red, and I think it will shortly, as it was right over here, it said, look out, there is severe downside risk, and you need to keep your option positions biased to the short side. So this is a negative momentum condition you see right there. As the slim ribbon turns red, the reversal scout negative. And if you look to the ideal troughs right over here, this is around the third week of March. So sometime where between the second and fourth week of March is where this declining phase should find its low. There right now, and DJV asked me, talk about the overlapping cycles. So actually in this harmonic family right over here, and this green dash is the MDY. And you can see how the MDY is just absolutely a great lead for us, comparing that to the S&P 500 and the NASDAQ. So you have this minor cycle right in here that you can see, and now we're coming to the trough of that minor cycle. So here is that minor cycle right here. Here it is right here. Here it is right here and here and here. It's just continuing. And so you have overlapping cycle energies going on in here. And after you have a little bounce in here, it then says it should fail. And you can see right over here where those resistances are. I'll just blow this up for you. And you can see this right over here says there's a potential to get up to about 59.60 to close to 59.95. So there's a potential for a real bounce in here right there. It doesn't have to be that strong. It could just, be gyrating sideways in here. I'm showing it making some kind of a flag, but then it's likely going to move down again. I've got another way of showing that to you right here. This is a phenomenally interesting chart as I switch over to the 2-hour chart. Now, this shows that cycle I just showed to you on the weekly with the overlapping cycles. These are the 15-day S&P cycles right over here. and the likelihood that it will be moving up in this flag area, but then finding resistance here. And this to me right over here, as I described on the daily chart, is a sell zone. And if it's able to get a bounce in here, it's bouncing against conditions that are very negative. You could see in here where it tested the swing zone, broke under the -25 and went negative. You can see in here it turned negative right here, right on time, and it's been telling you to bias your positions if you're an active trader on the short side. All of that. So you have a market condition indicator that's fallen all the way down over here from being at almost 100 or at 100 to the plus side. Look at how that turned down quickly and gave you that great information. Here is where you got a signal of momentum downside resumption. That was spectacular. And now you can see in here that it's pointing to a potential bouncing period, sideways bouncing period, with again maybe getting up to that 59.50 area right there, which would be a 90-point bounce. That would be a lot early part of next week. That's not guaranteed. We're not sure we're going to get that bounce in here. And what if this rally right over here was actually this trough? Then you could see it's already in the declining phase. If I add a few more days to this on the right, you'll be able to see how this sets up. I'm just going to apply it there. And then this, and if you learn about Hurst cycles, you'll know that the enveloping is very important, and that this essentially is saying that this is really what it looks like in here as the minor cycle comes down right into that low, and this is that mid cap 400 coming down right there, the 15-day cycle coming right over here, DJV. I hope this is really helping you understand how this stuff kind of all works together. You have that declining phase right in there. So you get a rally up here, it's really negative. I'm not going to go through the other indexes with this much information. You're going to get really the idea in there. And you can see that on the short term, these are all quite bearish. If you go to the near term, which is really 1 to 5 days, these are just upticking now from very bearish to bearish. The diamonds just went to neutral. So there's a little attempt at some kind of a bottoming going in here, but it's not really that significant. I hope that 2-hour chart that I just showed you was really enlightening, because here's that 15-day right there, and here's what it looks like on the 2-hour chart right over here, the potential bounce, and then this downside energy taking over again. So when you look at that, the downside targets here are right over here around 57.95, out sometime coming out towards mid to late March, and this one over here around 5,700. So the probability of a rally in here holding is just very small when you look at that. So now I'm not going to go so slow. We'll take a look at the NASDAQ in here, and you can see that the NASDAQ is giving similar information, but it is just about to take out that level right over there at the 78.6. So that's your warning level. Let me get a little closer look right over here so you can see that. Here's where it attempted to get down to it there about a month ago, 6 weeks ago, and now it's come down again. It has all this time. Here is that period out in the summer, I'm sorry, late spring, May, June, where it's likely to keep falling. This is a target of 19,842. This is about 19,273 right there. Let me just blow this up because I know that it's a little hard to see that. The 38% on the monthly is way down over here in the 17,780 area. That is a long way down when you look at that. Somebody asked me to show the monthly in the NASDAQ, so I'm going to do that. Just so that I can answer what the members have requested. So I'm going to go NDX on the monthly here, and I'm going to come back to that VIX in a second. That you can see. Here is the monthly right here. So that is the pattern in there, as you can see on the monthly. Again, you can see these high waves or tails that we're talking about. Here's your minor supports that are right in there. And this is a bear market that I think is going to happen out into 26 that you look at there. So we have a topping going in here, but the monthly is still positive. And until you get the intermediate turning negative, you don't really get a sign of the monthly turning negative. So, or even neutralizing. So this is still positive when you look at the monthly. And that answers what you were looking at for there. Now I'm going to put up the SPX and the monthly because this is so interesting. Look at these monthly patterns in here. They're beautiful. And look at what we've done in here. All of this decimation we're seeing in the stock market, in the Mag 7s, we barely have even started to come down in here. You haven't had any kind of a correction whatsoever. What are we down? 4% or something from the top right there, and we're seeing all this destruction. I mean, the 23% correction is down over here at 5,500, which, by the way, in my very conservative view at the beginning of the year, I said, well, that probably could be the worst level that we see here for this year, because you get a correction or a bear market into this period and then another upside move. But I'm concerned that this would get a lot worse after this is the 2025 period right here, that this 2026 period gets it down a lot further. So that's why I picked this for 2025 as a conservative low, but then 2026, I think, could be a lot lower. It's a little bit of an update from my end of the year. We had a request for the VIX also. So I'm going to start with the monthly VIX. This will blow you away. Look at those cyclical patterns, and they are just gorgeous. We had talked about the VIX bottoming in here, and it's setting up a top in the stock market, and that's really what happened. These gray areas are where important troughs come in the VIX. That means important peaks in the stock market. You can see in here, I go all the way back to long-term capital management, that bear market there, the next bear market here. So all of this is monthly information, and where we are right now is a period here where implied volatilities could be elevated and have upside spikes for years to come. So that's the monthly looking at the VIX. This is actually a little bit more than I expected to show you. Let's just take a look here at the VIX on the weekly and the daily. And let's bring up the analysis here, weekly there and daily here. Imagine the kind of work that it takes to do this all the time. That's why we have a team of 4 that works on all of these. Here's where we said that low was coming and the potential peak in the stock market. On the weekly chart, you could see what's going on. And yes, you could get up to 30, 35, 40 during this period. And here, between now and that March low we're looking for, and then potentially out into May, June, you could get this other period in here where you get this potential for a big upside spike. Here is your daily in there. And this is so nice. I mean, look at how well that followed as implied volatilities came up. We warned that that was going to happen over here. So somewhere out over here, there'll be a little pullback in the stock in VIX and a pop in the stock market. But then this period right over here, April, May, is the period where there could be another big upside move in implied volatilities. So that is a look at the stock market. I want to show you SMH for trading purposes, because as I showed the stock market, and we'll look back at the S&P 500, we're going to look at the correlation for SMH for trading and timing. Remember, the SMH, the techs, were monstrous leaders for the stock market on the upside, and now are leaders on the downside. So understanding that particular ETF and those stocks can be very valuable for the stock market trading. So let's look right over here, SMH. And you can see in here what we're looking at on the short term, bearish. We're looking at the intermediate term, slightly bearish. So you've got negative readings in there. I'm going to go to SMH here. Imagine if you could set up your charts like this, having our live charts. And this information, that, by the way, would be level 4 for you to be able to do that. And we'll take a look here at the weekly and at the daily. So if I blow up the weekly, this is a little earlier bottoming than we see as a potential in the stock market as this rolled over. You can see the shape of the cycles on the bottom, and this is the window where we expect a decline into a bottom. When you get into this a trough, potential trough, cycle low timing area is the biggest risk. This is your period of risk. This is when people, holders, lose confidence and dump stocks. Then they get oversold and then begin to move up. This is a gray upside arrow because we're indicating that we're in this bottoming area right over there, and these red downside arrows here are telling you, actually they're black, but they should be red, telling you about the negative condition in here, momentum negative. So we're looking for a potential for a throwaway in these stocks and then a bounce. If I look here at this, these charts right over here on the daily, this says, well, momentum in here, you see the option bias indicator is only at neutral right there. So it's kind of not giving you a real negative. Look at this orange dots. When this turns orange, it warns you of extreme overbought or oversold. That nailed that peak. This is our option bias indicator, again, a level 4 indicator. And you could see in here, these red lines are telling you down here to 226 or 214. And these are the supports that come off the weekly chart. And again, sometime in here, in this sometime in this March period, you're likely to make this bottom. So if you get a rally in here in these next few days and you're a very short-term trader, the probability is it's going to get whacked again, just like we talked about in the stock market, failing after an attempted upside move. If you're a longer term trader, then consider that there's some kind of a bottom in here. You may be a swing trader forming, and I'll look at the side by side in here as you're going to get the potential low sometime over here in a bounce and the potential low sometime over here in a bounce. That makes it shortable in a bounce now and potential as a buy over here when the stock market makes one of its bottoms that we're looking for going forward. And if you were an intraday trader trading these, you could have gotten great information by looking at the 2-hour chart, which you can see just absolutely gave you the signals right in here where it turned red right there, and it was absolutely perfect. When it was positive and green right over here, and this all green, you can see it gave you the upside move right there. So this is how, if you're an intraday trader or a few day swing trader, this is how you bias your positions using our 2-hour chart there with our proprietary indicator. So that's the importance of looking at something like the SMH for the potential of giving you important information. And I think there's something important there for you to pay attention to. Okay, we're going to move into the last segment of the show. This is coming up is a mini stock sectors. Arvi does a fantastic job on stock sectors videos. That's available with our level 2 special that we have. And so sometimes we bring in these mini ones where I just look at 3 or 4 or 5 different stocks. I've talked about the fact that if our stock market is going to hold up, you're going to need the MIDI and the Russell to turn upwards. It would give you a positive breadth situation. But RV just talked about in Future Speak the fact that breadth has been weak. It's been bad. And actually where the buying has come in has been in the European stocks and China. So I want to look at those right now so you can get a good idea as to what I'm talking about. And, if you wanted to put your money somewhere that was positive, well, do it where the trading is positive, where there's upside momentum, and our information will help you with that. And that's going to be something that I'm going to show you right here as I switch over to the mini stock sectors. Before I do that, I want to remind you that you can get our 3-month non-recurring level 2 membership for only $114.75. So you sign up for 3 months, you won't be renewed unless you want to be. $38.25 a month for this immense amount of information. If you did not see the specifics on it, then go back and watch what Matt showed you earlier in the show. This is a great opportunity to really learn what we do. And all you have to do is go to the top of our website, go to this link right right up over there where it says 35% off on level 2 special offer. Click that, and there's tons of information there and the link for you to sign up if you want to do that. Now we are in this mini stock sectors section right now that I did that little promo in there, and here is that rotation. And I really want to show you this because it's really interesting. So let's take a look as we switch over to the charts. And I want to show you the momentum tracker. We'll switch over. I'm just going to put up a couple of these. We don't have all these in our system yet, and we're going to put those in there. So here's a look at Germany, and look at Germany on the intermediate, very bullish. So if you were, looking at our stock market falling apart, and you wanted to see something that was an opportunity, you have very bullish on the intermediate. You have neutral here only on the short term, and that's what you get when you are going to be in a situation where you're getting a pullback in a very positive condition in here. So I'm just going to show you the weeklies in here, and you'll get an idea. Look at Germany. Look at this upward turn here in our reversal scout early in this rising phase of this cycle right over here, and pointing to the upside. You can see that resistance up there. This is just beautiful. You can see this minor cycle right over here. These are actually not in the right place. Let me just take those out of there. And that's talking about a little pullback right in here and then moving up again. So there might be a little buying opportunity coming as it moves down. And you can see, I'm just going to put up EWU in here. Which is the UK. Short term, that is still very bullish. Intermediate term, bullish. Let's just look at what the UK looks like in here. This is absolutely powerful. Look at this information. It's just turned up right over here on the weekly reversal scout, and it's just smoking. It's had an up week here with our market falling apart. So how important is it to watch these kind of things, as you have some great opportunities? Let's look at EWI here, which is Italy. You can see the same situation. It's got this shooting star in here, so probably going to get a little pullback in here, but I sure want to take advantage. If anything to buy, it's the ones to buy that show this type of strength. EWQ is right here. And again, that same powerful look, a little pullback going on, but sure likely to come up into these areas right over here. And one more that I'm going to show you right now, and that is EWP. This is rounds out the 5 European ETFs that I'm looking at. And you can see just super powerful. Look at this big upside week for Spain at a time when our market is getting absolutely slammed. So this gives you a great idea of how you can use our information to see what's strong and what's weak. And let me get rid of this. And just for a quick look in here, if I look at the short-term trade setup information in here, if I just scroll down right over here, you'll be able to see these are all the stocks that are bearish. I want you to actually see the very bullish ones first. Get that scrolling properly. And these are the ones that are bullish and very bullish. There are still stocks that are looking good when you look at that. And this will really help you understand. And of course, the ones that are very bearish right over here. And again, you can use this. I have this set to short term. You could set it to whatever trading style you are. And you can see the ones in here that are very bearish and gave you these negative signals. A lot of these went from bearish to very bearish in this last week. You could see Bitcoin actually went to very bearish on just a week ago. XRT very bearish a week ago. So, and you can actually get notified on these if you're a level 4 member. Download that app. Fantastic application that we have here in the Market Condition Monitor. And I've done everything I've wanted to do, team. That was it. If you're new to askSlim, you can start learning from our pros. Look around at our broad content for education and analysis for traders and investors. Go to askSlim, take advantage of our level 2 special. Hey guys, how did you like that?
Yeah, that was fantastic, especially the SMH review.
Yeah.
I
Loved it.
like that with the
It's
multiple
awesome.
time frames and talking about how you can utilize that for various trading styles.
Yeah. Yeah. Love
And
that.
I think one other thing to also look at is, U.S. markets have been doing so much better than everyone outside the U.S. for so long, right? What if
Mhm.
we go into a period where it's the other way, right? We have to keep our eyes open to that. So,
Yeah, when you have those structural changes in markets around the world, those can last for a very long period of
right,
time.
exactly. Yep.
I
Yeah.
think that's what's key with us is that you get that opportunity to see both the timing aspects of so many different major markets, countries, and then also the momentum shifts at the multiple time frames. So we really have a pulse on what's happening. And that's, I think, with level two, what you're going to get and really benefit from most is being able to be part of those shifts that are happening and being able to see that with us.
Yeah, absolutely. You know, the three of us and Katie, we're crazed because this is not only our work, but it's our life and our hobby, you know, so we look at this immense amount of information all of the time and we bring it to them, I think, in an extremely easy to understand way, between our applications and the way we put information on charts. So I'm excited about all that. And we have tons of new things coming on board too.
Yep.
So,
Yep.
All right.
all right, great
Absolutely.
work, great show.